All right, good morning, everybody. Happy Monday. Full start to the day. How you guys doing?
Good to be alive again.
Surviving.
Doing good.
There we go. There we go. All right, let's start off with some gratitude. Who wants to kick us off today? What are you grateful for?
The Eagles got eliminated.
Nathan, I figured you would bring something up about football.
Wow.
Anybody else?
I had my first open house that I hosted alone this weekend, and it went
That's
very
awesome,
well.
Chris.
Thank you
Thank you.
to all of you guys for your training and advice and all of that good stuff.
Awesome. How'd it go?
It went really well. I feel like I walked away with four great contacts, and probably three of the four are active or going to be active leads. So
Love it.
it went really well.
The fact that you did an open house and you got four great contacts, like real contact information, to me, that's already a win in the open house scene because that helped grow the database, didn't it?
It definitely did.
Yeah, love that. Thank you for sharing that one. All right, one more. Whether it's a gratitude or a feel good story or something, just something fun or cool that you want to share. All
I'll
right,
give you
cool.
something. Oops. Okay.
Go ahead, Dave. No, please.
Yeah, I'm saying I'll give you something. It was a strange weekend this weekend because I didn't do a lot of real estate work. Saturday, I was with my kids and they're older and out of the house. So it was Sunday morning 10K with my daughter, football with my son, and then I even hung out with my wife a little bit. But so it was a strange weekend. Not to do a bunch of real estate stuff. Had a couple calls, but that was about it. So that was nice.
Yeah, it is kind of, yeah, and thank you for sharing that, Dave. It's kind of funny too when our kids become like older and become adults and not on their own, just even what that relationship starts looking like, as seasons of life progress, right? All right, so here's what I want to do today. I want to do kind of just an old-fashioned update of the market. I didn't do it last Monday because last Monday was the 5th, and we were so close to the beginning of the year and that kind of end of December timeframe that I knew that there were some lingering closings that probably weren't officially closed yet that did close in December. They probably just hadn't been updated in MLS. So now that we're on January 12th, I wanted to take a look at how did our market perform last year. So for the purposes of this, just to kind of set the stage, what I went in, there's two reports, and I'll cover what these reports are in just a second. But the criteria for the report was simply this: all of the calendar year last year, residential properties. And when I click on residential properties tab or the clicking option in these two reports, it automatically gives me condo, townhouse, single family, all that. Okay. So residential properties last year, and then I did Mecklenburg County and the immediate surrounding counties. So we have 8 counties in this report. So it gives us kind of a pretty good overall kind of inclination as to the Charlotte metro area's market health, how we're doing, how we're functioning. And with that said, I'm going to hit to a screen share here, and we're going to pull up these reports. All right, so here's the first one that I want to look at. And this one is called the inventory counts report. Now, to get to these, let me kind of back up here real quick. Well, I can't. Let me see how I screen. Can you guys see this where it says matrix or a canopy at the top? Can you see
Yeah.
that on your screen?
Yeah.
Okay, good, perfect, thank you. All right, so when you're in Canopy, once you're in Matrix, you come all the way over here to the very right where it says more. And this first one right here has market reports. You click on that, and there's a pull down of reports that you can do. And I'll click on real quick here. There's two reports in here that I look at the most: inventory counts and real estate trend indicator. So the first one I want to go over is inventory count. So remember, I set the stage for what data I wanted, the residential last year in those counties I mentioned. And what this does, this gives us an overview. And now this is going to be pulled as of like 20, 30 minutes ago for that period of time. And this is what we see. We closed 36,420 homes in that category, in that area, in that time frame, worth over $20 billion in value, with an average price of 550,000 and an average days on market of 47. So we averaged almost 3,000 units a month that we closed. A little over 3,000 a month. Any ahas in that so far? Okay, we'll keep going. Let's look at expired next. So it's funny, we closed 36,420. We expired, or 36,000, or sorry, 3,668 properties expired in that same period of time, worth over 2 billion, or had a list price of over $2 billion in value, and an average list price of 569,835. An average days on market of 123. Any ahas there?
That's 10% market share there. Expires.
Aha, thank you, Dave. It's almost right. It's actually a little bit above in terms of unit count. It's a little over 10%, isn't it, of what we closed? And even if you look at the price, that runs in line with about 10%. And ironically, even the average price on the expireds being roughly, let's say, 570 compared to 550, was not a significant difference in price. But that days on market is quite a bit different, isn't it? We're going to look at another report in a minute that kind of looks at the days on market driver at a little bit different kind of view, if you will. So we'll take a look at that in just a second. The next one I want to go to is withdrawals. 7,361 withdrawals, $4.6 billion in listed value, average list price 632, average days on market 91. What are your ahas there?
Chip, my aha is that there are a lot of overpriced listings compared to what has closed.
Yeah, we definitely have some overpriced stuff. On the expired side, and it's funny, again, that difference was only $20,000 average per unit. But look at the difference in the average price of the withdrawals. The closed average price 550, the withdrawn average price 632. That's an $80,000 difference, guys. Any other ahas in the withdrawals?
Again, on the percentage side, that's a total of withdrawn and expired of close to 30%. That's a bunch.
You look at the withdrawals, it's almost twice as much, isn't it? It's actually probably right at twice of what the expireds are. So if we have 10% on the expireds, that means we have about 20% on withdrawals. So 1/3 of the market, when they came on the market last year, 1/3 of the market either expired or withdrew.
And I think for people that do a lot of calling on expireds or withdrawn, that it shows that there is a market for that.
What did we talk about last week on this call in terms of withdrawals?
Shadow inventory.
Shadow inventory, more importantly, shadow buyers, because we tend to look at shadow inventory sometimes on the list side. Well, there's the listings opportunity right there. There were 7,361. all of those people were gonna go do something else, weren't they? Well, I shouldn't say all. A majority of those people were likely to move on and buy something else. To me, the shadow inventory is on the buy side, because those withdrawals potentially represent how we're looking at this. The withdrawals represent approximately probably 15,000 of potential closed transactions. I want you to think about that for a minute. We're averaging how much in closed inventory per month last year? 3,000. And yet we're identifying right there, just in the withdrawn category, potentially, and we'll just do this really super simple. Let's just say 14,000. Every seller also becomes a buyer. So we're talking about roughly 4.5 months worth of closed opportunity just in the withdrawn category. Because here's the next thing I look at when I see the difference of 91 days average for the withdrawals versus 123 on the expired. There's a big opportunity. And here's why I'm not telling people not to go after the expireds too, please. If that's the area you want to focus on, go after it, because there's opportunity there too. But sometimes withdrawals tend to get overlooked. Well, they're coming up, they're making the intentional decision to come off the market. Now, some of that, of course, as we looked at it last week, could be reflective of the holiday season. And people are like, you know what, I just don't want to deal with it through the holidays and whatever. But ultimately, this is a year-long look. We're looking at this, not just a fourth quarter look. So if you had a system in place, or as we like to say, a MOFR, make offer for immediate response, something of value that would show withdrawn listings how you can help them achieve their real estate goals, there's some significant market share there, isn't there?
Hey, Chip, may I take us back for just a couple moments? Can you
Yeah.
tell me what a shadow opportunity is?
Shadow inventory. So let's talk about shadow inventory. I'm going to take you back to like the 2010, 11, 12 time frame. There was this kind of phrase that came out in the industry called shadow inventory. And basically what it was back then, it was that the banks had foreclosed on properties. Yet not all properties were immediately coming to the market, and they were foreclosing at such a high rate that banks were strategically not listing homes because they didn't want to flood a certain geographical area and depress the values even further, and therefore cause more people to have even greater amounts of negative equity. So the banks were holding on to listings, and that was known as shadow listing inventory. So that shadow inventory tends to show up, and there's this concept now on the withdrawn side, and it is with the expireds too, but as you can see, it's even greater with the withdrawals, that there's the shadow buyer opportunity. And what that really means is this. Again, people put their house on the market. They had an intention of selling. They had a high likelihood that they were going to go buy something else. And let's just for now, for the sake of the discussion, say that they were going to buy in our market. They were either going to get a bigger house, a smaller house, a geographically different house, whatever they were looking for, they were going to sell and buy. That buyer became a shadow buyer. There's demand out there for it, but the demand did not become a reality because they were not able to sell the house that they put on the market. And maybe they needed to sell it, or it was just simply they didn't feel comfortable having two mortgages or whatever the case is. There's this pent up buyer demand that is showing up right here on the withdrawn side. So we call that shadow opportunity or shadow inventory.
Got it. Thank you, Chip.
Very welcome. Thank you for asking. All right, I did not cover in this one, guys. I didn't cover the actives, the coming soons, the temporarily offs, the under contract categories. I didn't cover this in this because I wanted us to look at the close, the expires, and withdrawals. But there's some other data that you can, of course, kind of take away from this if you wanted to. But for the purposes of what I wanted to look at on this particular report, those are the three main things I wanted to look at. Any other questions, comments, or ahas around this particular report?
Just seems like a very large opportunity there with a third of the market not being sold.
Yeah, that's a big aha, isn't it? A third of the market not being sold. That's a great aha. All right, well, let's go to this other report called the Real Estate Trends. Again, in Matrix, I showed you how to get over to the reports. So now I want to go over here to this one. Can you guys see this one? It says Real Estate Trend Indicator.
Yeah.
Yeah.
Okay, perfect. Thank you. So here's what this one does. Again, same criteria. Here's your dates, calendar year last year, residential. Here are the counties. And now what this particular report does, this starts breaking things out by price point, bedroom counts, and then gives us totals. And underneath, or next to or around each of these categories, and also to the right starts giving us active spendings, expireds, and off market. Okay. So ultimately, if we come down here, as always, there's a disparity between this number here, this 36,419 in terms of total closed units, compared to the other report that said we closed 36,420. I don't know why this happens. It happens. But there's usually a little bit of difference. So that one unit different actually did not help us achieve 20 billion in sold volume on this particular report. But without semantics, we're just going to go with the same kind of process, right? Over 36,000 units closed, worth about $20 billion in total value in our market, our general area last year. So here's what I like right here. Okay, so the most amount of units that we did sell happened to be in the $400,000 to $500,000 price range. Probably not shocking, but that was our biggest price range activity level right there. The next one behind that was 300 to 350. Then we got 350 to 400. If we combine these two categories and didn't break them out into $50,000 units, I mean, there we've got over 9,000 units. So that really is our biggest category. So if I look at it, and if I take 300 to, what do we say right here, 500,000, I mean, you're looking at 15, probably almost not quite half, but pretty close to half of your units are in this price range right here. 3 to 5. And then, of course, not shockingly, if I move and add in the next one up, and if I went 3 to 6, okay, now I'm sitting at what, 7, 16, 20. I'm probably at almost 2/3 of the total units closed. We're in the $300,000 to $600,000 range. Any ahas around that? Okay, we'll keep rolling. So next I want to come over here and I want to look at this category right down here, days on market. So we closed here 36,419 units. Almost 20,000 units were on the market 0 to 30 days. If we go back to the other report, our average days on market for our closed units was running at what? Anybody remember? 43. But ironically, if we look down here, 0 to 30 days on the market, almost 20,000 of the 36,000 units fell into that category. Pamela, you brought up the fact about price. How important is price? It's showing up right here, guys. If we get the price right, the price, the condition, the location of the house are all in alignment. We get it right. We help the sellers understand and see how the market's performing. Look at what happens to your days on market. There's not a lot of price reductions that typically live in the 0 to 30 day time frame. Price reductions typically start at around weeks 4 to 6. They could start weeks 2 or 3. But on average, what we look at is at 0 to 30 days, we don't have a lot of price reductions. We're typically seeing enough showing activity. We're potentially getting an offer that works or offers we can potentially work with. We're seeing that kind of healthiness of the market and the activity level. And this is kind of the sweet spot of where we want to be right there in that 0 to 30 days in terms of pricing. And not shockingly, as we go up and up in the higher days on market is where we start seeing fewer and fewer units closing in this areas. But up in here, you know, once we probably are in this range here, we're starting to see a lot of price reductions, or at least significant price reductions, where it's getting the property more in alignment of where it needs to be. Because remember, this days on market in these units, these are for the closed properties. Okay. Any ahas around this or questions?
The previous report, hi, Chip, it's Fatima.
Hi, Fatima, how are you?
Good morning. The previous report you showed was it only Mecklenburg though? Because this one includes other counties as well.
No, the other one had all the same 8 counties.
The same? Okay,
Yeah.
okay.
Yeah, I wanted to make certain the alignment was correct for the time frame, the area, and what I was asking in terms of type of property.
Okay.
So I asked for the same identical things for both reports.
Okay, all right, I missed that on the first one. Thank you.
Yeah, no, thank you for asking.
I don't have a aha. Sorry.
Yeah, go ahead, Sharon.
I don't have an aha, but I'll give you an example. So I had forgot about this report, Chip, until you reintroduced it, I don't know, 6 months ago, maybe on this call. And so since then, I have been utilizing it both at a listing appointment for those sellers who said homes aren't selling in 30 days and to get the price right. So it's been beneficial. I've also been using it for buyers who maybe were dragging their feet, not wanting to make an offer right away because they thought they had time when a home hit the market 2 days. So again, somebody that's been around for a while, by being on this call, forgot about this report and started putting it into her system after you reintroduced it to me. So thank you.
Well, thank you for that, Sharon, because this is kind of the purpose of the call. I'm not trying to like drown people on Monday mornings with a bunch of numbers and data, but I want us to know the reports that we have that show reality of the market, because when we're in conversations with people, or we're at appointments where people are dragging their feet, or they want a list, or they have this perception of the market, this is, I love things like this that are simple, one page, here it is, it explains the market. It diffuses the objection that they're giving us at that moment in the conversation. So Sharon, thank you for sharing that.
Chip, and I apologize, but I have a question. Where can I find this report? And I know you probably said this earlier.
Yeah, no worries at all. I'll come right back up here real quick. When we're in Matrix, when you see this main screen, my matrix and all of this, where we go in to start, pulling comps, if you come all the way over here to the right, there's this one that says market reports. When you click on that, here's inventory counts, here's real estate trend indicator. And whichever one you click on, if you clicked on this is where you get to start setting your criteria. So this is where I just put in my date range. It's where I clicked residential. It automatically gave me all of these. Down here, I started listing the counties. And when I was done and I had everything I wanted, I just hit generate report. And then when you come back up here, it's creating these PDFs that then we can turn around. By the way, guys, this would be my recommendation. Look at these frequently. I'm not necessarily saying to look at them weekly, but I would look at them on a monthly basis. Create a folder and just save them. Here's January's real estate trend. Here's January's inventory count report. And then you can go back and have a reference, and then you can start spotting trends. Or if you wanted to go back and look at a different date in time, if you're in a conversation with somebody, you can maybe show a significant, or you could show maybe a specific improvement in something in the market about what you're talking about, just by having these reports already ready. That way you don't have to go in and keep pulling them all the time. So that would be my recommendation.
Thanks, Chip. I appreciate it.
You got it, Tim. My pleasure. All right, gang. So I want to cover one more thing on the real estate trend, because this thing I find really amazing. Because here, if we look at the 36,419 properties that closed, here is the list of how they were paid for. So shockingly, I'm sure no one's really, surprised that 22,000 of the 36,000 were paid for via conventional financing. That's the number one way, right? FHA right up here, nice and strong, almost 4,700 FHA loans. That is not the number two, though. The number two is right here in cash. And I'm going to come back to that one in just a second. But it breaks it down. Okay, so loan assumptions. A lot of people, there's a lot of things you might be saying, oh, hey, just go out and assume somebody's low rate mortgage and blah, blah, blah. The problem is if they have a low rate mortgage, they probably also have a lot of equity. And it takes a lot sometimes to pay. You got to pay that equity to assume. You still have to qualify in the assumption. But guys, out of all of this activity, only 19 were assumed. Is that a major part of our market? Probably not. Unless somebody desperately wants that. And these are probably super low rate loans. Down here, VA, 1,878. I don't know if I've got any of my folks on that I know focus on some military clientele, but here we've got roughly 5% of the market are VA loans. There could be an opportunity there. We know we get a lot of folks that retire from the military, have qualifying VA benefits. They love, a lot of retirees in general love the area, like moving to the Charlotte area. There might be an opportunity there to talk about that, because that's roughly about 5% of the market. But I do, while we got some time, I want to come up here and talk about cash. 6,602 units in cash. That's about 18% of the market is cash buyers. Historically, because I look at this report so frequently, for about the last 3 to probably 3.5 years now, we pretty much are right around 18% of our market, of our total closings, are cash. Who typically is the cash buyer?
Your investors, probably.
Could be investors. Who else?
People move up buyers using equity from the previous sale.
Yeah, a lot of equity, right? Because there is so much equity. Remember, guys, there are trillions of dollars of equity in the market. That's with a T. So if somebody, depending upon what they're selling and what they're buying and what their equity position is, a lot of times if they're not happy with the interest rates, they may just be paying cash. So this could be, not necessarily an investor. This could be an owner-occupant type buyer who's going to pay cash. It could be some investors that are paying cash. But ultimately, here's what I would say is that 18% has been steady now for over 3 years in terms of the total percentage of our closed units. And I look at this report at least once a month. It doesn't really spike in the spring. It doesn't really spike in the summer. It pretty much holds true at about 18%. So recently there was some, just last week, the current administration came out with a strategy or a plan to say that institutional investors, REITs, might not be allowed, or they're pushing them to not be allowed to pay to buy single family homes as investment, as real estate rental properties. Knowing that and knowing this, that 18% of our market are cash buyers, is that if that were to become a reality, is that going to be an impact on us in this market?
I feel like yes, but in a good way.
Well, so here's the thing. We have to look at it this way. About 1 out of every 5 to 6 homes are paid for with cash historically. And if I'm going to say probably a good solid half of those are owner to owner, they're not buying it, paying cash as an investment property. What that really means is that we might only have maybe about 1 out of 9 or 1 out of 10 homes that could be an investor paying cash for a property. So if that were to go away, I don't know if the impact is that significant in our particular market. It could make a difference, but I don't think it's going to be a significant enough difference that it's going to change our economics dramatically in terms of the amount of inventory, the amount of demand, the purchases, or anything else. It may balance some things out in certain areas. We could probably go back and look at maybe some of these 3 bedrooms where maybe it would have a bigger impact here. But overall, looking at this report, I don't know how much of an impact a rule or a law like that would really have in the Charlotte area. That's just my kind of 2 cents on it.
Okay, I
Because here's
understand
the
what you're
thing.
saying.
Most of the big investors that are out there, they're not borrowing money. They're paying cash. Now, if this number was 30%, I'd say, yeah, that probably would impact us and create more of an opportunity for the people that actually want to buy a house and live in it versus the big companies coming in, buying them and making them rentals. So I just wanted to kind of give that, not trying to make a political statement. And by the way, we could talk about, some of these companies that are building homes to rent them. Is that going to be the same impact? That's a story and a topic for another time, if that even becomes a reality down the road. But as always, I want us to just have an understanding of what the numbers mean, how it can impact the people around us, so we have the right conversations and go out and help more people. All right, gang, thoughts, comments, questions, ahas, before we wrap up.
Chip, I do have one question, and it might be insignificant, but is there any certain counties that come out as more cash transactions than conventional?
I haven't really broken that out, but typically when I look at Mecklenburg County, if I just look at that county for this report, that holds at about 18% too. But I haven't looked at like surrounding. I'm sure if we got into some of the outlier areas, and again, probably something around a 3-bedroom that's going to be around 300,000, maybe 350 or less, we would probably see a little bit more in terms of the cash purchases. But don't forget, a lot of times, even it doesn't have to be that doesn't necessarily mean a REIT, a real estate investment trust, is in here buying properties. What it could mean is I've got cash. I could even have a HELOC on my house and go pay cash for a property just to secure it. And then once I decide what I'm going to do with the property, I've already figured that out on the way in. If it's a light renovation, a full reno, whatever, I'm going to flip it. I'm going to hold it. Whatever it is, I've secured the property with cash. I'm probably going to do some sort of a cash out refi or a leverage down the road after I've improved it, either in the quality or the fact that I have a quality tenant in place and I'm demonstrating cash flow. Then I would probably, go ahead and do some sort of a cash out refi down the road. So sometimes these cash deals doesn't mean that the opportunity is totally gone and that inventory has been taken away and is only relegated to the rental side. It could mean that I'm going to improve the property by flipping it, making it more valuable and more, habitable, if you will, higher condition, higher quality, and then put it back on the market as available inventory. So a little bit of economics for everybody this morning. All right, gang, appreciate everybody being on. Have a great day. As always, anything we can help with, just let us know. Talk to y'all soon.
Thanks, Chip. Appreciate you.